everyone, and welcome to Real Estate Right Now, where we talk about real estate matters that matter to you. We are live here from Raleigh, North Carolina, part of the Greater Research Triangle Park. Today's show, we brought him back. I know you haven't seen him in quite a while. Michael Martin joins us. Michael Martin Mortgage Group, senior producing lender for Fairway Mortgage, joins us. He's back here. We got a lot of questions, folks. Let's be honest here. The market has been a little bit strange. Things have been happening a little weird.
No doubt.
We've got an ANAR settlement that's affected everybody. The Fed changes rates, and we're expecting certain things to happen, and they're not necessarily happening the way we expect them to happen.
No.
We've got issues, but then we've got questions. And first-time home buyers. What am I going to do about that? So we got a lot of questions we need to get answers. And so we brought Michael back because Michael is so great at helping us understand so many things. So we're going to talk about a lot of questions. And so please feel free, you're joining us live, please feel free to ask your questions. We'd love to hear from you. And Michael will be happy to answer those as well. Michael, welcome back.
Thanks so much for having me, Jay. It really means the world to get a chance to do this and talk about real estate right now.
Yeah, right now. So one of the things that you brought up to me was talking about relationships in real estate, mortgage relationships. And I thought this was an interesting question because I think people don't understand the relationships that go on with mortgage lender, real estate, or whoever the relationships are. So where do you like to start with that when we start talking about mortgage relationships that you have and those type of things?
Yeah, I think with the NAR settlement, right, everything that's happened now, things that changed the relationship. Well, it just enhanced it at the end of the day.
Right.
It made the relationship between the real estate agent and the mortgage lender extremely important, more so than I think it's ever been. Right. At the end of the day, right, the realtor's typically the one that finds the buyer lead, right, or the seller lead for that matter, and then they kind of become the quarterback in the transaction, right? So they're generally referring their inspector, generally referring their lender or a few lenders if they have a few. They're referring their attorney. They're literally kind of dealing with all the running backs and the tight ends and right. So they're the quarterback of the whole play, and so the whole deal falls apart if the loan doesn't show up, right? And so it's so important. Yeah. And I think specifically because of the NAR changes, and we found right now, right, it's kind of business as usual. Like really, I've not seen really any changes, and we're now a month and a half, 2 months in, I guess two plus months in. So I haven't really seen any changes at all with this. But as the market does get more aggressive, right, when we start to see interest rates come back down, we'll talk, I'm sure, a little bit more about that later, but then you're going to see more buyers come out into the market. Right. There's going to be more competition. It's going to be easier or faster to sell your home. Sellers are going to then all of a sudden, I think, pull back maybe on whether they're going to pay a buyer's agent or not, right? And so that relationship is so important because if the buyer doesn't have the cash to pay the buyer's agent, there's a big problem, right?
Right. No, you're right.
And so it amazes me, to be frank with you, I've been doing this now over 20 years. It amazes me how many real estate agents that do a decent volume that don't have a great partnership with a lender. It's we have access to data now. Right. This has changed. So we can look up, and most lenders do this, right? We can look up any real estate agent and find out who's done the lending transactions for any of their stuff over the last 3 years.
Sure.
And we can see who that is. And to be honest with you, if a real estate agent's done maybe 20 transactions in a year, there's probably 5 of those are cash. And out of 15, in most cases, it's probably 13 lenders, right? Which tells you there's just not a real relationship there. Right. And there's a lot of questions of why that is. I'm not sure. We can't pay for referrals. That's real important to know, right? It's totally illegal.
Absolutely.
We can do certain things to help for marketing, right? We can help our partners market. And we're generally happy to do that when it makes sense, right? We've got a vested partner that's, partner with us. So those things can happen, and they should, frankly, to help each other's business grow. A realtor cannot mandate that a client use us. They can certainly tell stories, right? I think it's the best way to sell is to just tell stories. Here's why I'd really recommend you work with my partner, right? Because when you don't, this thing happens, we don't close on time, the rate's different than what we expected, all these different things will occur, and it's just not smooth in most cases.
Yeah, and from a real estate standpoint, we have to be careful about steering towards one mortgage lender. So generally, if we're doing it right, we have several, a handful, I would say a handful of lenders that we've established relationships with, so that we're not accused of steering to a specific lender. So we have to be careful of that. I think the other thing that is really, really important here is that, you talk about us being the quarterback. Well, nothing really starts for us until we go to have a buyer go to a lender pre-qual.
Sure.
So you have to have these relationships with you guys, right, or gals, right, that we have to have, because we have to trust you to go, okay, we're sending you this buyer. They need to be pre-qualified before we can even show them a house.
Yep.
Right. So that relationship then becomes a lot more intimate, because now it's not just, okay, it's not just Michael Martin Mortgage Group, right? It's Michael, this is my person.
We look at it as this, like, so, one of the teammates you guys have refers us a client, and so they refer us that client. I really look at it as we're holding their paycheck until we get to closing, right? And so, because ultimately, if anything goes on with a loan, then nobody gets paid, right? Again, this is really, I think, talking about the importance of this, because so many lenders still today, I don't know how or why, will not get all the documentation up front, and then they wonder why things blow up, right? We had a transaction. I'm like extremely transparent, and we're not perfect. We're pretty darn good, right? And we are generally extremely great at getting all the documentation we need up front. We had a closing yesterday. By the way, let me back up a second to say our goal for every single transaction, well, really it's 80%, but it ends up being about 92.5% since 2022, since January, that we want our files clear to close 5 business days prior to closing. Okay. The industry standard is probably the day before, right? Like that's very normal. We're clear to close for tomorrow, it's common, right? Yeah. And so we literally track it every single week, and we're 92.5% of our clients are clear to close 5 business days prior to closing. It just removes so much stress, right, from the buyer's agent, from the attorney, for me, frankly, and it certainly gives the buyer an overall better experience. But I can't do that if we haven't done our job up front. So we had one yesterday where the buyer ended up getting a gift last minute, and we didn't know about it. But the reality is, Jay, I take full responsibility. We should have absolutely known that buyer was going to get it. If we closed on time, everything's fine. The buyer's happy, but it caused us to have a panic the day before. And I'm not used to that, right? Like, that is so freaking rare. And I had to go back and literally do a whole deep dive of how did we get to this point the day before closing. And so we literally picked up through the pieces and saw exactly what happened. There was a mistake where an assumption was made and we didn't clarify it. And that just normally doesn't happen, but it happens so often with most lenders. And then they blame the buyer, right? That is not the buyer's fault that they didn't tell me they were getting a gift.
Right.
But those are questions we have to ask. Right. And so you have to be proactive. I look at, it's funny. I do say that the real estate agent is the quarterback. I take a little bit different approach as a lender, where we truly, like, I feel like the lender's going to get blamed for anything that goes wrong, no matter what. So I may as well try to avoid that by being proactive in all these different areas. Right. And so we're proactive in confirming the closing well in advance. We're proactive in doing a lot of these things. All that being said, right, what the question was, how is, what about the relationship between the real estate agent and the lender? And I just think it's so crucial that you've got to trust that lender, whoever you work with, is going to do a thorough job to make sure you get to closing on time and smoothly.
And I think you make a tremendous point here. I just interviewed a Navy SEAL about communication yesterday on my other show. And, the fact of the matter is, you only get answers to the questions you ask.
That's right.
And every question that you don't ask, you never get an answer to.
Rarely do.
Yeah. So it really, the due diligence for both sides, not just the mortgage lender, but I mean, it's also the realtor too.
Well, if they want to take responsibility for that, they should. I think they should too, because at the end of the day, it's their transaction. That's right.
Right. So,
but I can't control that part. I can only control
you can only control what you control. Right. I understand. But it is really, when we're working together, it's going, you know what, I didn't ask the question either, or hey, I asked this question, did you bring this up, or whatever. It's that communication, clarity. I think that relationship is really supposed to hone in on, right? I mean, the better we are at that relationship, better our communication.
Well, and you know what most loan officers will do, right? They'll blame the client, or they'll blame the underwriter, or they'll blame the appraiser, right? And it's like, take responsibility, right? You know, one of my favorite books is Jocko Willink, right?
Extreme Ownership.
It's literally, I've read that book like 4 times. I've had the extreme opportunity to get to know Jocko, and I worked at a company before that he actually worked for a little bit after he got out of the military. And so having got a chance to know him in several, small meetings, he did some leadership training at this company. But that book is just, that's why we look at this from a perspective, like, we're going to get blamed anyway. We might as well just take responsibility for everything.
No, right with you. Totally agree. Love the book. Love Jocko. And by the way, all those SEALs, by the way, it's part of their mantra.
Absolutely.
It's take extreme ownership. And if you're ever around them long enough, you start to realize that it could be 99% not your fault. Focus on your 1%.
That's right.
Focus on your 1%.
That's right.
Little tip for everybody out there.
Absolutely.
Let's talk about the role of annual mortgage reviews. I thought this was an interesting question because I don't think we've ever talked about it on this show, or actually I've not really heard much talk about annual mortgage reviews. Let's talk about that, the annual mortgage review process. Why do we do it? Why should we do it? And what are we looking for?
Yeah. And so this is, as a mortgage lender, right, it's our responsibility to stay engaged with our client. If we want, I know you know the name Todd Duncan, right? Todd Duncan. I was a big Todd Duncan guy for many, many years and still have a lot of respect for him. But one of the things that he told me in one of the first seminars I ever went to him, he said, Michael, if you want to have clients for life, you have to talk to them during their lives. Right.
Point.
And so an annual review, if nothing else, is just the great opportunity to check in and see how your client is. Now, you need to talk to them more often than just once a year, right?
Agree.
We have a system that we use. So today's Thursday, and Thursday is past client calls for me. So I have about an hour and a half blocked out for my, it's this morning. After I leave here, I'll go do this. And so I have a system that we utilize. I created, I don't know, a few years ago, but the first Thursday of the month, I call past clients that closed this month last year. Okay. The second Thursday of the month, I call clients that closed this month 2 years ago. The third Thursday of the month, I call clients that closed last month, because I need to touch base with those folks that just closed, right? But it's given me enough time to be a reason to follow up with them.
Right.
And then the fourth Thursday is clients that we closed this month 3 years ago. Now, I was hesitant to make these calls. I'm going to get back to the annual review, but I was hesitant to make these calls. But by the way, this goes into, hey, let's have an annual review. I was hesitant to make the calls because I'm like, well, these people don't want to talk to me. Like, they got in their house, nobody, I tell clients all the time when I'm doing my consultation with them, like, listen, I know you want the house. Nobody wants a mortgage, right? I tell people too, going to see the mortgage guy in your head is probably about as fun as going to the dentist. No offense, dentist, but nobody really wants, there are very few people. My wife loves going to the dentist, but anyway, very few people will like that experience, right? And so we try to make it a great experience for our clients, and they tell us that in their reviews. But when I call them and get a hold of them, now obviously you get a lot of voicemails, but when I call them and get a hold of them, it's shocking after the conversation, like the stuff that they remember from the transaction that I don't remember. They're like, man, your team was so great. You guys helped us. We appreciate you so much. And I'm like, wow, that's great. A year ago, 2 years ago, you remember that, right? And of course, now for mortgage lenders, it's more important than ever. For the folks that we closed since middle of 2022 to now, when rates do finally come back down, if I don't stay engaged with them, we've sold their loan to a mortgage servicer. That servicer wants to get that refinance along with every other mortgage company out there. And if I don't stay engaged with that client, then I'm going to lose that opportunity. Right. And so the reason, not just for myself, so when you go back to why do you do a mortgage review for a buyer's perspective, their stuff changes, right? Like, especially over the last few years, right? I'm sure you know this, right? Credit card debt is the highest it's ever been.
Out of control.
Last I heard, I don't even know when to say the number because I can't remember, but it was a big number. It was like 7 trillion or something like that.
It's a huge number.
And so, calling your clients, they've got, especially if they close before 2020, they have a ton of equity in their house. Does it make sense to get out of a loan that's 3.5% to take one that's 6.5%? It doesn't seem like it would, but in some cases, you can save them. If we can get rid of a bunch of credit card debt that's at 22%, you can save them cash flow of $1,000, $2,000 a month. And somebody that's making $100,000 a year, or a household family that's making $120,000 a year, that's a big deal. Right.
That's a big deal.
And so, yeah, I also hate like these commercials you hear, and Pronto, Loan Pronto is one of them all the time, right? They talk about you get rid of your debt by utilizing this equity line. You're not getting rid of debt. You're transferring debt, right?
Right.
It's like they act like you're getting rid of debt. Now you are getting rid of credit card debt, but most clients, unfortunately, would just go back and run those credit cards back up. So we do a little bit of coaching to help our clients with that too, while we're doing those annual reviews.
Yeah, which is great, because I think what happens is, oftentimes, right? I know it's practiced here, but oftentimes after the purchase or the sale, a lot of folks just move on.
Yep.
And it's so important because, it's kind of like getting married. I know this is going to sound like a weird analogy, but honeymoon is easy. The marriage is hard.
Sure.
Right. So, when they first get into the home, right, everybody's happy, we're in our brand new home. But checking on it later, right? What are you experiencing? What are the challenges now? It matters to them, because they really do. Buyers want to go, wow, I'm glad somebody's checking in with me, because I do have some questions that I didn't think about before. So I think that,
it gives me the opportunity to refer our partners, right? That maybe, so I'll ask them like, hey, what's your favorite thing about your house? And they'll tell me whatever their favorite thing is. They love their yard. Have you done anything to your house since you've been in it? Nope. I've just done, or I added a deck, or I did this. Right. Is there anything you want to do to your house? Oh my gosh, we really want a pool. Like, okay, cool. Let's talk about how are you going to pay for that? Right. Well, we're never going to be able to. Well, what if we have this option for you? Would that work? Right. Just helping them find solutions to that. And then, naturally, we really do. I tell clients this in my consultation. I absolutely need you to have a phenomenal experience.
Right.
So that selfishly, by the way, very selfishly, because if you do, then I'm hoping you're going to refer me your friends and family and then come back. If I don't take care of you, you're never going to do that. Right. So I literally tell them selfishly, I need you to have a great experience. So I'm going to do everything I can along the way to make sure that happens.
Yeah. And again, it's really the proper way to do business. I know we say it's selfish, but really it's the proper way to do business, because, we really do care.
Yeah. That's the thing. I think so many people think, I think the reality is most mortgage lenders, most real estate agents are transactional. They say their relationship, but are they calling their clients after closing? Right. You guys do such a great job with so many different events for your clients to stay engaged with them, right? They're coming in here to get pictures of Santa. They're coming to pick up pies. They're like those shredding
That's
paper. Right. All these little things but they add up to staying in relationship with your client. And it gives your buyer's agents and listing and selling agent the opportunity to stay engaged with them. You guys are providing that for your agents, which is just crucial, right? Because they don't have to pay for all those things. All they have to do is pick up the phone and call them, please come to my pie vet, right?
Yeah, and get to see them face to face.
That's right.
And catch up.
Yeah. We do about 3 events a year as well as our team.
And the face-to-face interaction is just so powerful.
Yeah.
To be able to say, wow, how's it going? And then the people who come back, in Linda's case, she's a client from 1985 who's like 90 years old who comes back, right, to pick up her pumpkin pie, right? But to just stay in touch with her, right? It's powerful when you see her and she's still driving and she comes in. It's just a real powerful moment, right? And it's because, when you really do demonstrate sincerity and caring from your perspective or the real estate perspective, it's when lives change, and it's impactful.
Sure.
It's really impactful. The NAR settlement has created a lot of issues. One has been a concern about first-time home buyers.
Sure.
What are, there's been some adjustments for the VA, right? There's been a few adjustments there. What are we seeing in terms of first-time home buyer right now?
So the biggest challenge right now, first-time home buyers, is still affordability overall. There are plenty of options out there for, for down payment assistance, that kind of stuff. So that can help with that. But at the end of the day, it rates at 6.5% with big giant student loans. There's some challenges there. If they don't have a family member that's able to provide a gift opportunity for them, it's a challenge. The NAR piece has not hurt them yet.
Okay.
The biggest fear is that when it's time for buyers to pay a buyer's agent,
right,
on top of down payment, on top of closing costs, on top of inspections,
Right.
And then a warranty. All these things are going to add up to the point where it's like, I have $20,000. That's going to take $30,000. I can't buy this house.
Right.
Right. So that's where we're going to see first-time home buyers really struggle. We're not there yet. When rates come down and more competition comes back, I'm afraid of that.
Yeah, I'm concerned with that too. That this could be a challenge. I think it's one we'll probably be able to overcome.
Yep.
But I think it's going to be a challenge. As we run down here in the last few minutes, I do want to, because I want to talk to you about your work with the Helene in up in the mountains. Mortgage rates, they're about to come out today and make an announcement. I think
CPI. I think.
Yeah, it's going to do that. They dropped the Fed came out, dropped the rate, but we didn't really see that happen in the mortgage rate.
Well, we did actually. We did.
For a moment.
No. We did before that, right?
Right.
So it's interesting. The Fed was very transparent that it was time, right? They had the one of the meetings was 3 weeks before. Oh my God, Jackson Hole meeting there. And so when they were at the Jackson Hole meeting, they basically said it's time. So the market's already started that. By the way, if you look at the chart, really rates have been getting lower fairly consistently since April. Okay.
Right.
So literally we already saw that half point that they did in the Fed funds. People are like, well, they thought they were going to do a quarter. They did a half. We should have seen more. We already saw way more than that. In fact, we've now pulled back. So you know who Barry Habib is. Yesterday he had his speech or his talk for his MBS Highway was really showing some data on how every time except for one for the last 40 years when the Fed has done their first rate cut, we've seen them bounce back up. I think he said average about 37 to 47 basis points. I can't remember what he said. And so you've seen rates actually go back up right afterward. But then after that, they actually come down about 2 3/4, if I'm not mistaken, somewhere in maybe 2.5-ish. So we should expect that in the future. The question is, how long is it going to take? Again, the only time it didn't happen was when the Fed cut in 2019. That's the only time in the last 40 years that this didn't happen. So it was very much an outlier. But they still obviously did come in much after that. So we are expecting rates to go lower. It's frustrating because I think we were all in the mortgage industry and real estate side seeing these rates come down. Everybody's gearing up that maybe we're going to have a really strong fourth quarter to make up for not such a great year so far.
Right.
We're up about 25% so far this year from last year. So I'm very grateful for that.
Right.
But my goal was 40% increase. So we're a little bit behind on that goal. But I do think we're going to see low rates. I don't know whether it's going to be the end of this year or in the spring. We just need inflation to stay low. That report came out half hour ago, so I'm not sure what it said. But
I'm not sure either.
Yeah,
I got a notification as we were coming in this morning that we're supposed to see something here at about 8:30 or something like that this morning. So as we close, I know that you've been doing some work with Samaritan's Purse and at the hurricane relief efforts as a result of Helene. Where we've lost somebody, I got a quote here that we've lost 42 zip codes in Western North Carolina, that there's 42 zip codes that no longer exist. These towns have been completely wiped out.
Wow.
And a lot of people don't know that.
I even can't comprehend that. I don't understand that.
Yeah. So like literally the postal service gone. They just don't exist. The houses are gone and everything. And it's 42 zip codes was the last quote I got. And you've been doing some work. Talk about the work that you're doing there and what you're seeing and
man, what we've done is so little compared to what has to be done.
Yeah.
So the hurricane came last Friday, if I'm not mistaken, or 2 Fridays ago.
Fridays ago. Yeah. We're about 2 weeks in.
Yeah. And my Tanya and I were leaving Saturday morning to go to Florida for a President's Club trip for Fairway. And so we were in Palm Beach for this stuff, and we're literally, on our, as always, right on our phones and searching social media. I felt like this tremendous weirdness of like, and it's not in Raleigh, right? But it is North Carolina. I felt abandoned. Like we're in Florida in this beautiful place. The weather is perfect because the hurricane's already gone through there. And I felt like, God, man, we got to do something. Well, fortunately, a competitor friend of mine, David Colgan, who's one of the guys here at Movement Mortgage, he has a house up there. He was actually up there training for something. He had reached out and asked for some donations. Immediately, I just here's some money. I got to figure out what I'm going to do after this. So just actually had a conversation with him yesterday and what his efforts are. He's actually up there still. He's got people coming in and doing work, which is awesome, like coming up and sharing. my team and I talked when I got back, and we were like, we got to do something. I mean, I'll give Taylor and Nicole, my team, the most credit. They're like, we just feel so guilty that we're sitting here and all these people are struggling. And so I said, well, let's go. So we checked out Samaritan's Purse. I honestly have to say I was pretty ignorant to what they do. Holy moly, this organization is absolutely fantastic. If you don't know about them, please go look them up. Samaritan's Purse. They're actually based out of Boone.
Yeah, they are.
So Taylor on my team graduated from App State. So we ended up going up Thursday after work. Taylor brought her boyfriend. Nicole brought her son Nolan, and then we went on Facebook and said, here's what we're going to be doing. Ask for donations. Put my Venmo out there. All of a sudden I got about $1,700 that people were just sending me. We went to the grocery store, loaded up with all the essentials, right? My Navigator was just jam-packed. We all drove separately because Nicole had her entire car full of clothes.
Right. Taylor
had her entire Jeep full of water, like 23 cases of water. So we drove up Thursday night and then got up early. I think you had to be there at 7:30 at Samaritan's Purse. We already signed up on their website. Show up, they're in this big church, and it is unbelievable organized. Like there's probably 300 people there. They divide us into groups of maybe, I don't know, 15 groups or so. Then you go out and there's a team lead. They tell you what house you're going to go to. They kind of explain, this is really important too, right? Because you're just up there to work and do what they tell you to do. They explain, first of all, the first hour or two is going to be a little bit slow going. So don't get frustrated because you were there and you want to get rolling, right?
Right.
And that is exactly what happened, by the way. I'm like, I feel like I need to be doing something. And so we get to this house and it's just devastation. I mean, the house itself is standing, but like everything around is just devastation. Boone, by the way, looks actually like nothing happened, at least from what we saw. But once you get outside of Boone, it's just insane.
Yeah.
So we go and check this first house. First house where, this is going to say the guy is kind of explaining, hey, he goes, you guys are cleaning out their houses and cleaning out their stuff, but realize what this, like, let's not call it trash because this is their life, right? That has now become this trash that we're removing. And realizing the emotional state of what these people are going through. And he's like, listen, sometimes these people may want to talk to one of you guys. And we just ask, I don't care if you do no work, if you just talk to them and be there for them, just do that. Right. So we get to the first house and it was mostly like brush cleanup. And then the inside people were cleaning up. I mean, the house had been flooded. So they had to gut the inside of the house and take all the stuff out of it, create these different piles. And then poor, God bless these souls, had to go underneath the house. It was just mud and muck, and they had to pull out the insulation. It was just soaking wet, the insulation of this house. We ended up moving to another home. It was up the mountain a little bit, like a mile and a half. We were walking. We didn't know how far we were going to have to walk. We get up there, and it's just literally there's landslides that had come into this barn and this garage. Mud had pushed through the back of the garage, pushed all the way through, pushed the cars out the front of the garage, and literally filled up this garage with mud. And all the other stuff that's in a garage, right? Some of it gets pushed out, some of it's pressed against the wall. And we spent the majority of the day, probably another 5 or 6 hours, literally with shovels and wheelbarrows, and dug this garage out, right? There were, and that kind of work. The money is really important. So please give money. Please give donations. They still need these things. It's getting cold, right? So these people need coats, and they lost all their stuff. But man, what really needs to be done is boots on the ground, people in there actually, grabbing a chainsaw, grabbing, a shovel, and helping them, because there's probably 20 some people at this particular house that we were volunteering on. It was hard work. Like I've done a lot of labor when I was younger. I haven't done so much in a long time. I don't got my own grass. But man, and David and I were talking about this yesterday. It's amazing what people will do for someone else that they won't do for themselves. Right. So I just plead everyone, thanks for letting me have this time, but I just plead, guys, they need your help. I mean, what Florida is going to be going through in the next few days is another whole story, but this Western North Carolina is so, we love the mountains. We love going there, and these people need your help. That's just,
I know we've been sending our moving vans to, full, to, I think there's one up there now.
That's great.
I think there's one up there right now. That we've been sending stuff. People have been coming in, donating, putting things together, and we've been just sending it up there, and they keep coming back with same stories that you just can't imagine until you get there what you're really looking at, and there is just not enough feet on the ground. And what we're
maybe some people are hesitant because of their age or their health. If you're not healthy, don't go volunteer to do this stuff. Right? Don't hurt yourself.
Right.
But I saw 80-year-old women, right, that were doing everything they could, whatever they could to help support. And I mean, I was just so, so absolutely like in just, I can't even, there's no words. Like I was so, it made me proud, certainly, to be an American. There's people that just care.
It's awe-inspiring.
Absolutely.
It's awe-inspiring to see what's happening there. And they can use your help. I'm just telling you right now, they can use your help. And so we would really appreciate it if you continue to do those efforts. Samaritan Purse is the name. They can certainly use your help financially, but also, if you can get over there to our state of North Carolina, the western part of the state, would be awesome as well.
I have not been to Asheville.
Well, there's the smaller towns, right? Yeah. Too. I mean, like we said, Chimney Rock doesn't exist anymore, right? There's all these other small towns that just are gone, and people have lost everything. And you don't think about having flood insurance in the mountains.
Nobody's got it. They said something like in Watauga County, 40 people had flood insurance, right? You'd have it if you lived up behind, like next to a creek, right? That may rise, but that's about the only time you'd ever have it.
But and so this is the bigger problem. It's not something you think about. If you're in Florida, you probably think about it.
Yeah, I would think so.
Right?
I would hope so.
You think about.
Well, you're probably going to be required to have it.
Right. I mean, even
if you got a mortgage, anyway.
If you're on the coast, you probably got wind insurance and some other insurances that cover those type of things. But in the mountains, it's just not something that we think about, and which is why this really caught so many people by surprise. Tragically.
Yeah.
We know that there's a lot of people still missing that we don't know of, and so it's a tragic situation. Appreciate you going and doing that work, you and Tanya and David doing that work. Appreciate Samaritan's Purse as well. Thanks for doing this, man.
No, thank you.
I appreciate it. Thanks for your efforts. Thanks for what you're doing. Stay with me. Folks, it's the show. I say to you every week, you had a lot of choices. You chose us. Thank you so much. Give us a thumbs up on YouTube where you watch us. And also, wherever you may be listening to us in your favorite podcast, give us a 5-star review and a positive review. We really appreciate that as well. We have been doing this show now. We've almost done 100 shows, and you've joined us so much. So I can't tell you how grateful we are for you. Please tell your friends. We'd love to have you do that. As I say to you all over the world, you know what that is. Ciao, everybody.
Take care.